Thank you very much for this kind introduction. So also very, very warm welcome from my side to all the participants, to the audience. So I think in view of the time, I think I make here full screen mode. So just let's kick it off. A short introduction of RENK, what RENK is doing, and I think maybe more important, what is the strategy, and of course the midterm outlook for RENK. But let me start with our first slide. Why RENK? Why it should be a good idea to invest in RENK. So I think hopefully many of you know the figures on the top half of this slide. So I do not want to stress these figures. I think quite familiar to you. I think let's focus on the bottom half on this slide because first of all, what is RENK doing? RENK is really a very typical German engineering mechanical company with a transition of more than 150 years. So RENK is a leading provider for propulsion technology. So we are in some way a mobility enabler. Of course, we are known for our core product. It's a transmission for especially a heavy tracked vehicle. So we are the number one in this kind of field of mission critical drive technologies. And I think also important on the right hand side, we have a market presence for our tracked vehicles of round about 75% of our global addressable market. It means it is excluded nice countries like China, Iraq, North Korea, of course. So addressable market. And I think now when you're looking on the four pie charts on the bottom half of this slide, so we have right now a defense share of around about 3/4, and civil business is around about 1/4. So we are really a defense company, and it's further growing and increasing. I think this second pie chart maybe is the most unique one. I think it's our USP by far because our share between new build and new business and aftermarket business. So it's a 64% new build and 36% aftermarket business. So if you compare RENK with other defense peers in Europe, you will hardly find any other defense peer with such a high aftermarket share. So this is really a unique strength of RENK, and therefore we are really proud. And I think the good story is we want to further increase this aftermarket share. Maybe I will touch this later on. I think not only our aftermarket business is very nice, it's also our geographical diversification. So this is now for the group, not only the defense business, so it's the total group. And you're looking on the geographical split, so I think it's nearly quarter for Germany, quarter for European, Middle East, APEC, a quarter, and Americas a quarter. So we are highly diversified geographically. I think this is really important, and this is not only geographically, it's also for our customer base. So we have really a diversified customer base. We are not that dependent on a certain customer. Last but not least, the fourth pie chart. So RENK consists of three divisions. So it's the VMS division. It's the largest and important one. It's Vehicle Mobility Solutions division. So it stands for around about 2/3 of our revenues and 3/4 of our adjusted EBIT. So this is purely defense business and purely land domain business. Our second largest division is M&I. It's called Marine and Industry. So it's a mixture between marine and navy business and industry business, so civilian applications. The split between the marine/navy business and the industry business is nearly 50%. 50% is navy business, 50% is industry business. And the last division, it's our smallest one, but a very nice one. It's slide bearings. It stands for around about 9% of our revenues, of our group revenues. That brings me to our next slide. So what are our products? What is RENK doing? So of course, I think you know it. The most famous product of RENK is of course transmission, especially for land vehicles and tracked vehicles. But we do not only produce and assemble transmissions, but we have, as I mentioned it before, we are a mobility provider. So we have in our portfolio also engines and suspensions for tracked vehicles. And looking at our M&I segment, so we have also, of course, gear units for Navy applications, so for surface vessels, frigates, destroyers, submarines, and so on. But also, as mentioned before, we have also solutions, applications for industry business. And here you see, by the way, we are clearly the #1 market leader for several applications. So I think in a nutshell, this is our product portfolio of RENK. To get one step further, I think this is maybe quite impressive. It's only a small number of platforms where RENK is in with its products. So I think we always take the example that it is easier to name the platforms where RENK is not in, because we are covering more than 70 army nations globally and more than 40 navy nations around the globe. So this brings me back to my first point, that we have really a highly diversified customer base. So we have here on the left-hand side our products. So it's transmissions for tracked vehicles. We have also suspensions, final drives, engines, couplings, and so on. So maybe to pick out some famous platforms where RENK is in. So I think you know it by heart. The Leopard 2 is of course equipped by a RENK transmission. Also the Panzerhaubitze 2000. The K2 is a South Korean main battle tank, heavily used, for example, by Poland. So we are a sole source supplier for the Polish K2 for the export K2. Then, of course, the Puma howitzer in the US, and so on and so forth. So you see, it's only we are nearly covering the whole platforms around the globe for the NATO nations, and as mentioned before, for the addressable and accessible market. On the right-hand side, of course, some customer names. I think some of them are quite familiar to you. So this brings me to our financial framework. So I think the guidance for 2026 is, I think, hopefully familiar to you. So we want to achieve more than 1.5 billion in terms of revenues, and our adjusted EBIT guidance is 255 to 285 million euros. So the midterm guidance. So when you look in the middle, these two figures. This is the former midterm guidance we have provided during our CMD in September 2024. So we want to achieve more than 2 billion in terms of revenues by 2028 and more than 300 million in terms of adjusted EBIT by 2027. And the midterm guidance on the right-hand side of this slide, I will come later on. I think on the bottom half of this slide, you see our financial building blocks. So I think interesting for you as an investor, of course, our CapEx ratio as percentage of revenues. So in average, we are still sticking to this 3% of CapEx ratio. So you will recognize a slight increase in the current year, close to 5%, and to 4% in 2027. But in average, from 2024 to 2030, we are still at this really low number of 3%. I think also interesting for you, I think it's cash conversion rate. So our ambition and midterm goal is 80% over time. So this over time means in a 3-year average. And net working capital ratio. So I think this is the last point I want to mention. We have this ambition out of 20% of revenues. Right now, I think we are at a level of 25%. Of course, we have the aim to further decrease the net working capital ratio. And over time, I think this is our midterm ambition to achieve this 20% goal. This brings me now to our strategy. How do we want to achieve our midterm target by 2030 and beyond? So I think this, as I mentioned before in my intro, so we are a defense company. Currently, 75% roundabout of our revenues are defense related. And you see it here. We want to increase it by end of this decade to roundabout 90% organically. So the civil business will further decrease to roundabout 10%. So we have two different management approaches for these two kinds of businesses. The defense business is, of course, the center of gravity for all, for CapEx, for OpEx, for R&D, for M&A, for capital allocation. So full throttle. So focus is, of course, on profitable growth. It's a little bit a different story for the civilian business. So maybe you know it, especially the new business. The new business within the industry is, of course, highly margin dilutive. So therefore, we have this approach of managing for return. So we have a selective approach of what new business we acquire, and maybe we are focusing on further aftermarket business outcoming of a new business within the industrial business. I think so. The message is clear: 90% defense revenues end of this decade, only 10% is civil-related business end of this decade. So I think we have this midterm guidance now up to 2030. So we have provided this midterm guidance during our CMD last year in November. So we want to achieve in terms of revenues 2.8 up to 3.2 billions in terms of revenues organically. And the question is, how do we achieve it to achieve this new midterm guidance? So we have forget this D bucket, so the right-hand side bucket, concentrate and focus on the three buckets A, B, and C. So the walk towards 2030 midterm guidance consists of three buckets on three levels. It's A, it's the order backlog. B, it's the pipeline potential. And of course, C, it's the incremental German uplift. I will touch it later on. And looking at the figures, currently we have an order backlog of 6.9 billion end of the first quarter. We have a projected order pipeline of 11.5 billion, excluding Germany, and also it's also included only new business, no aftermarket business. And as I mentioned before, the German uplift, so 1.4 to 2.2 billion, this is the range. And do not forget the aftermarket opportunity and potential, 3 to 4 billion until 2035. So let's take a deeper look into the three buckets. Maybe first, the bridge towards this 2030 midterm guidance. So if you accumulate all the three buckets, you will achieve this figure of 2.8 to 3.5 billion in terms of revenues. But I think there are three requirements that must be required in order to fulfill this midterm guidance. First of all, has RENK enough financial power to invest in OpEx, in CapEx? So I think there's a tick in the box. The second thing is, has RENK the supply chain under control? Is it stabilized? Is it secured? There's also a tick in the box. But now comes the third level. Are the primes like Rheinmetall, KNDS, GD, and so on fast enough to ramp up their capacity? And so this is something we do not have in our own hands. So it's highly dependent, of course, on the speed of the primes. So if they are not fast enough to ramp up capacities, so maybe we have no chance to achieve our midterm guidance. But you can trust me that all the primes, especially of course Rheinmetall and KNDS, are doing a lot of effort, of course, to increase capacity. I mentioned it before. So the first bucket to achieve our midterm guidance by 2030 is our current total order backlog. And our total order backlog consists of 3 buckets. So the first one is the so-called fixed order backlog. End of first quarter, 2.6 billion. Fixed means signed contracts. And we know that, of course, this project will, or this order intake will come for 100%. So it's already signed. The second column is the so-called frame order backlog. It consists of course, like the name is also telling it, of frame contracts, especially with foreign MODs. In this case, the biggest bucket, the biggest chunk of this frame contract is related to our US facilities. And the last one, it's a so-called soft order backlog. It stands around right now at 3.5 billion. Soft means maybe it's a wrong expression, because it is not as soft as it sounds, because we know that the project will come. We do not know when it exactly comes, but we are knowing from customer discussions, we are the only sole source supplier for this platform, and this is included in our soft order backlog. I will give you one example. Before Christmas, there was this German approval of around about 50 billion of military expenses, and there was included this Puma second batch program. And I think only 2 or 3 days later, after this approval by the German government, the Prime, so it's a joint venture between Rheinmetall and KNDS, they have received the order by the German MOD, and this means that we have included this second batch of Puma in our soft order backlog. And 3 months later, so I think it was end of March, we have received by the Prime the contract for delivering 200 Puma transmissions. Then this soft order backlog converted into fixed order backlog. So I think this is a nice example. What does it mean? Soft order backlog and converting it into fixed order backlog. So in total, our total order backlog 6.9 billion for a time frame of nearly 4 years. So it's 5 times annual sales. So I think we have a high visibility for the upcoming years. And this brings me now to our second bucket, our order pipeline, which we have identified out of customer discussions, of known projects, of known platforms. We are knowing that they will come. And this, as I mentioned before, is excluding Germany and only includes new business. So you see here, it's separated into different areas. So it's EMEA, so it's European Middle East, it's Americas, and it's the APEC, so the Asia Pacific region. On the right-hand side, you see certain specific platform and programs names. So the potential is huge. So on our first slide, you saw that we have a market presence of 75%. So does it mean that we will win every new tender within the next 6 years? No. But the likelihood to win at least 50% of this 11.5 billion is quite high. So I think we have really a very, very strong order pipeline. That brings me now to bucket and lever C. It's this incremental upside potential by the German customer. And looking on Germany, so I think Germany right now is fully committed. So there are no financial constraints. There is no problems with debt structure and so on. So Germany is fully committed to execute on certain various platforms and domains. And looking at the German procurement process, so this is divided into 2 phases. The first phase already started last year in 2025 and will durate until end of this decade. So this is the first phase to fill necessary important gaps. And believe me, there are many gaps in the German Bundeswehr, in the German army. The second phase will start beginning of next decade until 2035 and beyond to fulfill NATO requirements. And on the right-hand side, you see some famous German platforms. And I think since I think first quarter last year, we always work with ranges. So we have a range for the Leopard 2. This also includes the so-called family vehicles. So it's not only the Leopard 2 main battle tank, but it's also family vehicles like a bridge layer, minesweeper, recovery tank. So the range for this Leopard 2/family vehicles is from 500 up to 1,100 Leopard 2 vehicles. And the same is for Panzerhaubitze, Puma, and Boxer, and so on. But do not underestimate and do not forget also our Navy business. So also the German Navy is fully committed to further increase the Navy fleet. So the MEKO A200 and some submarines and so on. And this is the famous F-127. So in total, Germany, I do not want to say they are doing a perfect job. So I think Germany is doing a good job in terms of politicians and MOD and procurement. So now it depends. The table is on the money, by the way. So it depends now on the industry to exercise and to perform. So in total, Germany has an incremental upside of around about 2 billion. And now this brings me to our last point in terms of how to achieve our 2030 midterm targets. Aftermarket. I mentioned it at the beginning. Right now, our aftermarket share is in a range between 35 to 40%. It depends a little bit on the product mix during a certain quarter, but this is the range. And we have identified a potential in terms of aftermarket of 3 to 4 billion until 2035. And you can believe me, this is a very conservative approach. You see on the right-hand side here, the 3 to 4 times. What does it mean? So after selling a new transmission to a customer, to an end customer, to a certain army, it comes over the whole lifetime, 3 to 4 times back for an aftermarket service. And this is based, of course, on historical data. And by the way, aftermarket business consists of 3 or 4 business streams, by the way. The most important one, of course, are the spare parts business. We call them golden parts for certain reasons, of course, because especially spare parts have a decent margin level. And the second revenue stream within the aftermarket business are spare transmissions, maintenance, repair, and overhaul, and some field service. So the biggest part of the aftermarket business, around about 70%, are spare parts. And this is why we want to develop, by the way, we want to further increase our aftermarket share. So what's happening right now and in the upcoming couple of years? Right now, we are flooding the market with new transmissions. And every new transmission adds an additional layer on future aftermarket business. So after a certain time lag, I don't know, maybe after 3 or 5 or 3, 4 or 5 years, the aftermarket business will kick in by this incremental new business. And you can imagine that in the last 3 decades, the usage, the training of the armies, of the NATO armies, was not very high. This has significantly changed by the meantime. So the nations are training more, are exercising more, and of course, if you are using more, then of course you must go more often to aftermarket service. And last but not least, because I have only 5 minutes left, maybe this is also familiar to you because this slide we have shown on our Q1 release on 6th of May. I think this is a very good example how we are converting our next gen mobility for, we call it for a RENK 2.0 for digitalized solutions of our current products. So these are 4 examples. The first one on the left-hand side, we have received in the first quarter in this year the official contract by KNDS to develop a new kind of Leopard 2 transmission for this so-called bridge solution. So we are now the sole source developer for this new kind of transmission for the bridge solution of the Leopard 2.8A version. The second thing is we are showcasing at the Eurosatory in Paris. It's a famous and huge defense fair in Paris. Our first transmission for heavy wheeled vehicles. It's a so-called ESM 280. So we are also trying to enter these wheeled platforms, by the way. And I think the most interesting one of these 4 examples is the so-called UGV. UGV stands for Unmanned Ground Vehicles. So on the Eurosatory, so I think it's 4 weeks from now, we are showcasing our first prototype of an heavy tracked unmanned ground vehicle in partnership with the Finnish prime. It's called Patria. So all of you are highly invited to visit us at our booth in Paris at the Eurosatory and to see this unmanned ground vehicle prototype. And last but not least, also in the first quarter, we have received the first R&D order to develop a Navy gearbox for an unmanned and autonomous surface vessel. So these kind of examples are indicating that we are now doing the next step to digitalize our current products, that they are drive-by-wire capable. And I think we are concentrating, of course, right now on our old product portfolio. But on the other hand, we are now developing the needed solutions for new platforms, because every new platform requires certain drive-by-wire, X-by-wire capabilities, and therefore RENK stands for, we have the knowledge, the competence to further develop our products. So this, I think, concludes my short presentation of RENK, and now I'm happy to take your questions.
Yes, we just have a minute left, so just one quick question. So looking at the broader defense ecosystem, where do you currently see the largest opportunities for RENK to expand beyond its traditional core appliances?
Good question. So I think I touched it. I think, first of all, the field of unmanned vehicles. This does not only mean unmanned ground vehicles, because also a drone in the air is also unmanned. But of course, we are focusing on land and sea. So I think this will be a very, very interesting market for RENK, because we are highly convinced that this unmanned vehicle market will be a mass market in the next decade. And this is the reason why we are preparing right now for these new developments. So this is one field we want to further develop and increase. And the second thing is the topic aftermarket. The aftermarket will further increase in the next decade. I mentioned it, and I hopefully I explained it correctly. So we want to establish and develop RENK as a software or MTU aero engines company with an aftermarket share of 50% or maybe beyond, to have really a nice aftermarket business with recurring revenues, with generating free cash flow activities. And then, of course, I think these are the 2 big drivers for our business in the next decade.
Christian, thank you so much for the fantastic presentation.
You're welcome.